All right, so what is seller financing? Well, I'll talk real briefly about the history of seller financing, but we'll talk more specifically about how we do seller financing today, here and now. First off, I'm not an attorney, I'm not a CPA, I don't have a legal degree or an accounting degree, but let me share with you my definition of seller financing and really what we see the market responding to as it relates to seller financing. When I got started with seller financing, it really wasn't needed for the general public. It wasn't needed because banks were just freely lending money out there like crazy. Anybody that had a heartbeat could get a loan. But as an investor, I was looking for creative ways to finance because I was limited to the number of loans that I could get, and I was limited to how much was required of me to get a loan. So I began to look at seller financing, and investors were really the ones that were using it. But seller financing has been around for hundreds of years. And it wasn't until banks came along, and specifically it wasn't until the 1980s when the lobbyists and the banks that began to enact new laws or new legislation that changed the way in which the banks were lending money. So for hundreds of years, it's been out there, it's been around, but it's quickly changed. And really, over the last number of years, the last 10, 15 years, seller financing wasn't needed for the general public because it was so easy to get a bank loan. But now today, you're probably hearing lots about it. You're probably seeing it pop up in news articles, and it's becoming very popular because of the way banks are lending money and how difficult it is to get a loan. So let's talk about the definition of it and how it's done. Well, by definition, we're talking about title transferring from a seller to a buyer. This is done by way of owner financing or seller financing. Owner financing and seller financing, really the only difference is whether or not there's an underlying mortgage on the property or underlying mortgages. In the case of owner financing, the owner is truly offering the financing. This is done by way of a promissory note and a deed of trust. When a seller is offering the financing, it's when there's the underlying mortgage or mortgages and the seller is creating a new promissory note and they're creating a new all-inclusive trust deed to wrap the mortgage or to wrap the mortgages with the new terms and sell that to a buyer. So both of these ways are 100% legal. They're very common ways. However, over the last number of years, they've been less common because it was so easy to get a traditional loan. If you want to learn more about why this change in our economy and in our history, make sure to watch the video on Is Seller Financing Legal, or the legalities of seller financing. We'll talk about the due on sale clause, the due on sale clause and the Garden St. Germain Act, and why seller financing has not been more commonplace. So what is seller financing? Well, there's really those two true forms of seller financing, and it's not a lease option, it's not rent to own, it's not contract for deed. Those are all creative ways to finance, but we're talking about really truly the owner or the seller creating financing for a buyer.